Good day to one and all. This is Dr Sivaraman of iknowindices.com. Let me present the second part of Forex market forecast for the year 2012, the majors in the commodity pairs versus the US dollar. And those of you who attended the part 1, which I presented between 9 and 9:45 GMT, may find it convenient to continue with regard to what I am going to explain. And the part 2, I am going to present it now between 16 and 16:45 GMT. I think there is an error. Between 16 and 16:45 GMT, I'll be presenting the part 2. And I'll also recollect what all I explained during the part 1 in order to have the continuation for those who are attending this particular webinar as a fresh one. Now, why we need the long-term forecast? See, especially the long-term forecast is beneficial for the people to understand the direction of the market in the long-term run or down the line for a month or 2 months, so that the traders can try to do the trades in line with that of the direction of the market, whether do a buy and sell trade or a sell and buy trade. In a rising market, it is better to just buy during the drop so that you can book profit during the subsequent rise. So if the market is in upward direction, it is better to do the buy and sell trade and avoid doing sell and buy trade, as the sell and buy trade might lead to traps when they happen to gain the levels very quickly in the market. Those who are doing the derivative trading like options and futures, so down the line, February options or March options, if they try to take it, or the futures in the positions, or those who are doing the CFD trades as well, they could find it interesting to have the long-term focus so that they can hold the position for a few days, a week, and months, and try to maximize the profit. So that opportunity is there with regard to the derivative trading. And those who are doing the position trading on a monthly basis, that is taking entry into that of the market during the month-end trend reversal and exit during that of the next month trend reversal time, if they understand that monthly trend reversals happen during the last week of the month and the first week of the next month. So during that time, they can make use of the long-term forecast. And so you have seen the year-end downward move, and the first 2 weeks of January, the downward move. If somebody would have taken a buy position during that trend reversal time, then they will be benefited now, because when Euro has gained from 1.26 to 1.29 and JBP from 1.5253 area to 1.55 area now. So that sort of long-term trades can be planned, understanding what could be the direction of the market. And as you know very well, in the market, whenever they wanted to make an upward move, they will try to make a quick downward move and then reverse. But the time taken for such opposite move or a pushback move might vary depending upon the time frame, whether it is on a daily basis as a stop end above that of the initial high or below that of the initial low as a stop end for the day to start. And the week, for the week beginning, they do the false move, and similarly for the month, they take 1 week to do this particular type of trend reversal. So if you understand the reversal mechanism, I am going to explain it in detail, and then it will be easy for you to make use of the long-term forecast. And those of the international business people who are trying to take the forward cover and the swaps, they are also benefited with regard to the long-term forecast. And say, for example, when US dollar was very strong, and at the time when Euro was very weak, around 1.26, if somebody has just made that export to that of Europe and trying to receive the money, and he is going to receive lesser profit and vice versa. So from that of the strong currency, when that export is being done to that of the weak currency, and then by the time they receive the money after 2-3 months, and if that weak currency becomes strong, then you try to get less. Similarly, those who are taking the loans from that of the other countries in the international banks, they also need to have the forward cover in order to avoid the currency fluctuation. And you know that a typical example could be in 2007, 2008 when uh, yen was around 118, 120. A lot of people, because that was the first country to reduce the interest rate to almost zero, and they have borrowed the money when yen was very weak, around 118, and now they have to pay down the line 2, 3 years. They have to pay in periodical installments, but now yen has become very, very strong. So when it becomes 77 and 76 from that of 118, it becomes extremely a very big loss proposition if they would not have taken the forward cover for such loans. So this sort of long-term forecast is beneficial for the institutions wherein they're going for the long-term structured financial arrangements with other banks, the other country banks, and also those who are doing the currency conversion trades. And there are some traders, they hold US dollar account, euro account, GBP account, and yen account, etc. in a single bank, and they try to transfer the fund from one account to another account simply, and that will be equivalent to that of a no leverage trade. And so when a currency is very, very strong, transfer it to that of the weak currency, and when the weak currency becomes very strong, they can transfer it back to that of the weak currency, then earn. I'll explain that how exactly the long-term forecast can be beneficial. Now, before going to that of the entire forecast for the year 2012, what I have presented during part 1, I wanted to show you the yearly forecast, the yearly predicted chart for 2012 in the case of Euro USD, and which is displayed to that of the privileged and the premium members in my website, iknowindices.com. I'll just focus the camera to that of the chart. Okay. This is the predicted chart with the actuals for 2012. What I do is on a month basis, I just plot the actuals. So the actual is in the light color and the predicted chart is in slightly darker blue and it is in light blue color. And you can see the months are here and the weeks and the months are being displayed here along that of the x-axis. Along that of the y-axis, you come across the level. So how exactly the market is expected to go from that of the year-end closing level of 1.29 in the case of euro. Slowly they are expected to gain down the line by month end or next month to 1.41 to 47 area and then drop to 1.39 and then go up again to 1.49. And these are all the weighted moving average values for each week, and those dots are being connected with the help of the curvilinear lines. So you come across that the chart levels are indicative, and it is not necessarily that the actual market need to respect those levels. And as you see here, that euro started from 1.29 and came down, and it has come to 1.29 by that of the third week. So it is expected to catch up and try to go up. In between, you will come across the oscillations, up and down moves in the market, and that may not be reflected here because they are all nothing but the moving average values. They are being connected, and these actuals are expected to cross over with these predicted chart, and slowly you will find that euro is expected to flare up in the month of October, November to that of 1.5657 area. And this is how the expectation is being derived using my algorithm, and I can prepare the chart for n number of years with the help of my algorithm and how exactly the market is expected to behave. And so I'm going to give you here the forecast till 2015. So with the help of the slides, I'll just briefly explain it. So euro is on the uptrend in this particular year, and during the end January or February, there could be an event which could put US dollar under pressure, or it could happen during that of the August to September, October, during this particular time frame, and there you could come across a sudden spike in the case of euro, and there you might come across the real weakness of US dollar. And keep in mind that the players keep their base currency in US dollar, so they never make it as a waste paper. So you might come across the comments that US dollar has become a toilet paper and things like that, and they are all just to induce the sentiment, and you see that US dollar keep becoming stronger and then again weaker. That is market. So in the market, they have to necessarily make a currency to weak and then later on make it stronger. Alternatively, only then the trading can happen and the traders can go in for a distress trade, etc. And the players can continue to earn the money. So, and this webinar is being recorded, so this chart will be available for your reference in future. And also I will recollect these forecasts once in 3-4 months and just plot the actuals and show it to you how exactly the market becomes predictable when we try to use various type of analysis rather than the conventional analysis of the technicals and fundamentals. Let me minimize the chart here and go back to that of the PowerPoint presentation. So I have shown you the euro predicted chart for 2012. So in the year 2012, US dollar is expected to show initially the gaining moves and ending with big losing moves. And this is what the forecast says. And euro and GBP are expected to gain to higher levels, a range of what higher levels seen during 2004 to 2007. Similar pattern of charts might be formed during this particular time frame. Then all along USD-Yen, which was undergoing the multi-year downward trend reversal, is expected to gain significantly. More one-sided rises are expected to happen in this particular year. And year 2013, that is next year, USD will be gaining briefly and then lose again, big as a market surprise. So you could see the continuation of the Euro and GBP gaining during this particular year and also in the case of 2014. I'll show it with the help of the next slide. So how exactly the position trading strategies can be initiated following the major trend? The position traders and derivative traders, currency conversion traders, international exporters and importers, taking forward covers and swap ups, and also the institutional members going for large amount of investment can buy euro and GBP, USD-Yen and USD CHF around the prevailing level now and exit in April, first week of April, and re-enter in July and exit by early December 2012. So these sort of two trades, if they do it, they will be able to make substantially the profit. And those who have got small accounts with a bank in the currency conversion, they can try it out and tell me later on whether it was beneficial or not. And now I wanted to just show you the live market code page just to show you how exactly the contrarian moves are happening in the market. Now you can see the live market code page. Now euro is showing negative net change, 35 pips negative net change, and GBP is showing 48 pips positive net change. GBP from 1.54 area suddenly jumped to 1.55 area during the late European session. So this is one typical contrarian move. Euro making negative net change, GBP making positive net change. When GBP is showing positive net change, USD-Yen is also showing positive net change. So it's a contrarian move. GBP is showing USD weakening move and USD-Yen is making the USD gaining move. So when they make this sort of moves, you find that US dollar index is unaffected because what the index might be reduced by the numerator currency, but the denominator currencies could compensate it. And also in the case of CHF, you find that it is making 14 pips positive net change when GBP is making 44 pips positive net change. It is a contrarian move. And a typical contrarian move here, the Canadian dollar is showing positive net change and Australian dollar is also showing positive net change. How simultaneously Canadian dollar is showing USD weakening move, and Australian dollar is showing Canadian dollar is making USD gaining move, and Australian dollar is showing the USD weakening move. Australian dollar is showing USD weakening move, yes. So you find this sort of contrarian moves. When that happens, you find hardly it has got very less impact with regard to US dollar index. So it is not advisable to go straight away to that of the US dollar index. Try to derive the trades out of that in other currencies. Sometimes it might be misleading because they are doing this sort of contrarian moves. If we understand these contrarian moves, then accordingly we can fine tune the US dollar index for our trading idea. Let me minimize this and come back to the PowerPoint presentation. So again, I wanted to extend the forecast, convert other majors to that of US dollar by 2014. Till 2014 end, one can trade in Euro and GBP on the buy and sell mode, and also in the case of the denominator currencies like USD, USD, CHF, and Canadian dollar also do the buy and sell trade. But Australian dollar is expected to weaken, so there you don't do similar trades. So you can do buy and sell trade. Whenever there is a quick drop, you can buy in these numerator as well as the denominator currencies, excepting Australian dollar. And when they gain, then you can book profit during this upward trending channel, which we are going to see for the down the line 2-3 years. And by end 2014, you can convert the other majors to that of US dollar and earn substantially during the US dollar gaining time in 2015. And in 2015, you will come across a terrific attack over that of terrorism. And you will find the world over, everybody will be talking about terrorism, and those who are involved in terrorist attack and things like that, they will be severely punished during this particular time, during 2015. So I thought that I can give these things which will really boost US dollar to gain a very big way, because US is expected to take all the initiative for that. Now, coming to that of the trading, currency conversion trades and forwards. The currency conversion traders can have different currency accounts, like in a bank, having US dollar, Euro, and GBP, etc., other currencies also account, and transfer the money from one account to the other account. But when you do the transfer, sometimes the bank charges about 150 to 200 pips as their commission. So when the market Euro is around 1.29, they may just give you a quote 1.27. So that you have to negotiate with the bank and try to ask them to give it in about 3 to 5 pips. And they will do it if you tell them that you are going to do the currency conversions very frequently in good volume, and they will definitely provide such facilities. And then you can just convert US dollar to Euro and GBP and deposit there, and in April transfer it back to that of US dollar again. In the month of July, you transfer it back to Euro and GBP and convert it back to that of US dollar by early December or November, end November. Then you will find that US dollar growing just like that without taking any risk. It is 100% risk-free trade, and it is something like a delivery-based trading, what you do it in stock market. And that is referred as the currency conversion trade. And if you are smart enough, then you can just convert it based on the cross trades, like you can just transfer Euro to that of GBP and back to that of Euro. Because I have given some of the trades for some of the people, like converting Euro to that of GBP when Euro GBP was around 0.89, and they are all trying to book profit around 82 area. So that sort of trades you can do it, aiming for about 500 to 700 pips. There, in the case of cross trading, they might be charging only 100 pips if you are stranger to banks, and otherwise, if you just negotiate with them, they will be able to give it for about 5 to 10 pips spread. Then, international exporters and importers, and those who are doing with regard to the currency trades, and invariably you come across the risk is very high, and especially when they do the billing in other currencies other than US dollar. Suppose somebody is exporting the goods from US to that of euro, they try to do the billing in euro. And some other people, they also bill it in US dollar. There are advantages as well as disadvantages in billing in the foreign currencies, and they are supposed to take the forward covers and the swaps. And especially this sort of trades are very, very vital. Otherwise, whatever the profit marked up, they have it in the export or the import, and that might be lost due to currency fluctuations. And for that, they have that insurance, etc. for the currency risk. But still, that will not give the coverage for them unless and otherwise they go in for the forward covers. And sometimes the payment might be delayed, and accordingly they have to swap the forward cover so that they'll be able to get the maximum yield out of that. This is also equally important to that of the international borrowers, especially the multinational companies. They borrow from various countries where the interest rate is very minimal and try to invest it in a country where the interest rate is very high, and probably for the infrastructure developments, etc. And they might be having a plan to repay it after about 2-3 years, and they have to necessarily do the forward cover down the line. Otherwise, they might incur heavy loss with regard to the currency fluctuation, especially during that of the time frame where the multi-year trend reversal happens. The people lose money like anything. So these things are very important for the people in the business to take care, and they should be aware of when exactly the multi-year trend reversals are going to happen and protect their fund accordingly. So whenever a currency is very, very weak, say for example Indian rupee, which was around 50-54 level, currently around 50-30 area, and an exporter from India normally is supposed to take the forward cover. And so in the forward cover, if they try to take it down the line for several years, and they will be benefited because USD INR is expected, INR is expected to become stronger against USD in coming months, and otherwise they will lose all the profit what they have done when their rupee was around 50-52 area. If they exported it and receive it around 48-46 down the line in the month of March, April, then they will incur heavy loss or the profit might be eroded. So for such people, these sort of long-term calls are very important for several months to take the forward cover. And whenever the local currency is weak and whenever the local currency is very, very strong, see, you know that Indian rupee, for example, which is trading around 39.40 at that time, the analysts were telling that it could go to 35 area, 36 area, etc. And a lot of people have taken the forward cover around 40 and they suffered heavy loss because afterwards it came to 44, 48 and 50, 51, etc. So when the local currency is very weak, and such people should avoid taking forward cover. Very strong, they are supposed to avoid forward cover. When the local currency is weak, then they can take the forward cover. So this sort of understanding is very important, and especially they need to know the long-term forecast, and they should not go with that of the sentiments what is created at the current moment. Then swaps can be used when the currency is very strong against the currency in which the transaction is to be done. Say similarly, now Indian rupee, which is very weak now, and if they want to do the export to that of import to that of the oil import, etc., and they have to go in for a swap rather than the forward cover, they need to understand these things. And similarly, anything which is exported from Europe, for example, now you find euro is very weak, and they try to export it from Europe and try to get back the money after about 2-3 months. And when euro becomes very strong, then they are the advantage. That is why I said the billing is very important, in which currency there proceeds after that of the transaction. Then with regard to the trend reversals, intraday and weekly trades in line with that of market directions are very important. For that, we need to understand how the players make the moves on a daily basis, weekly basis, monthly basis, and yearly basis. So, a small drop, you should not become panic and immediately say that euro is not able to go up. So, when it comes to 1.26 and struggle to go to 1.27, immediately you become bearish and say that no, it is not able to go up, as if it has got its own life and it can climb up in a very difficult way and try to come up to 1.27 and 28. So if you think like that, then it is extremely difficult to sustain in trades. So for that of the intraday trades, you need to understand that they make intraday trend reversal. Not more than 2 sessions they make similar moves. And we need to understand during the European session, you know that from 1.2885, suddenly they dropped it to 1.29 area in the case of Euro and GBP. And afterwards, they have recovered GBP, but not Euro. So this is how they make it. And immediately, if you think that Euro is not able to climb up, GBP is able to climb up, as if it has got a better life than that of Euro, then we will be in trouble. That's all. So the players make swings upward and the downward stop. These are all the earning process for them. The false move, extended and the intentional moves are to be understood. So I explain it on a daily basis during that of the Asian session live market analysis. And again I am repeating it for the people to understand how the moves are made by the players in sequence. And it is a very systematic procedure. They are doing it, but we are not able to understand. So that is why I am repeating it. And those who attend the Asian session live market analysis webinar between 5 and 5:30 GMT will be able to get a hold of the market, and they will be having a mindset to face the market and always keep in mind expect the unexpected in the market and use the trading strategy to limit the risk and maximize the profit. And similarly, the weekly moves are very important. Week beginning false move during that of the trending week. That is the second and the third week. You come across week beginning false move on Monday, then opposite in the next day. Tuesday, if they drop on Monday, straight away rise it on Tuesday. Then if you think that they are continuously going to rise, no. They will just continue the rise during that of the Japanese session, early part of European session, and start dropping it and hit the lows during that of the late European session and US session, and then reverse. Either way, stop-ins will be seen during that of midweek Wednesday. In the last 2 days, they will make the trending moves. And if you want to really capture the profit without any constraint or without any difficulty, just to do it only on Thursday and Friday, you will be able to see the trades go well. And if you continue to trade, becoming addicted to trading, then on a daily basis, if you do it, and some days you will gain and some days you will lose, because they have a systematic arrangement, plan of making the moves in the market. Similarly, the monthly moves. So, month end and the new month beginning time, they make the trend reversal for during the last week of the month and the first week of the new month. The trending moves during the second and third weeks of the month. This we need to understand. Then it is very easy for us to trade in line with it of the market expectations of the direction. Then finally the yearly trend reversal. So these are all different time frames. The yearly moves 2 weeks of the last month of the year, and that is 2 weeks of December, the last 2 weeks of December, and first 2 weeks of New Year, that is January, first and second week. They make the yearly trend reversal moves. So you would have seen this time very typically they have made the first 2 weeks the trend reversal move. They brought down from that of the year end close of 1.29 in the case of Euro to 1.26. In a matter of single week, they took 2 weeks to come down, and in 1 week they had taken it back to 1.29. But you know very well there is no solution brought to that of the Eurozone crisis or any such problem for that matter. And when non-farm payroll was released, everybody was expecting the risk appetite move, but whereas they made the risk aversion move or the USD gaining move at that time as a surprise, and later on they started gaining the level, and now you find that it has come back to that of the year beginning levels of 1.29. So similarly, they had dropped today, euro, during the European session, and slowly they are gaining it. And you can see that GBP also, they gained it. So this is the way they are going to bring in that volatility in the market, and you should be able to handle it carefully. And if you take positions now and just hold it, and next week we'll find further higher levels, and during the trending times like the second and the third week, you can really capture the profit, but we need to book profit and re-enter during the false move on the next week, and then buy and book profit on Tuesday when they rise it. Again Wednesday when they drop it during late European session, buy it and exit by Friday. Hope it is a very systematic trading plan. So, market continues to give trading opportunity. If you view the volatility as a great trading opportunity, and why we are not able to see that? We are afraid of volatility because of over trading. So always keep a commitment that you take very less position at a given time, like 1 or 2% of your equity is used to take the position, and then use the hedging order to limit the risk, or a stop if the hedging facility is not available, and try to keep stop at entry and try to remove the hedging order of the stop so that you don't incur any loss in your trade. Then make the stop into a trailing stop, maintaining 15 to 30 pips from that of the market, and try to keep the limit in the opposite side, or any day about 150 pips net change level. You see in the live market put page the net change, 150 pips net change level, what could be the approximate level, you can calculate. And today when euro is trading around 1.2931, and currently it is showing 35 pips negative net change. So you can add about 185 to that and try to keep a limit there and use the trailing stop. The market may hit your trailing stop or hit your limit, so that you can either book a minimum profit or a maximum profit for the day. That sort of trading arrangement, using the trading strategy, you could do it, and between the trades necessarily give 2 hours or 30 minutes gap. Don't immediately try to enter into the market during a small pullback. So when euro goes to 1.2985, when it comes to 1.2970, if you try to enter, you will hold the position for a longer duration. At least give about 30 minutes to 2 hours time frame, then you will be able to capture it around 1.29. So this is how the trading has to be planned. If you plan it well and without any emotional attachment, and also see that the market continues to give trading opportunity. If you have missed it because of some other work, don't regret about it. You will get another opportunity to enter into the market. If you give importance to the levels, then you may not see the same levels. But if you are looking only into that of the profit, try to buy near that of the low set for the day and try to maximize the profit during the day, you will find the trading is very interesting. Because they keep changing the levels, there comes the confusions for that of the traders. Then players take some time, a week or more, making consolidations and false moves, like the yearly trend reversal. The last 2 weeks of December and first 2 weeks of January, they have taken a prolonged time of nearly 1 month to do the consolidation. At that time, many of the traders might lose the faith in the forecast or lose the patience and think that the market is going to drop severely. Then later on, we find that the patience is rewarded. So, do position trade in profit-making position. This is yet another important aspect. After keeping stop at entry, if the position is making profit, try to maximize the profit. And don't simply hold a loss-making position and say that I am doing position trade. That is wrong. So many of the traders do that. No, I am comfortable with position trade. At what level you entered? I entered at 1.33. I am waiting for the market as per your expectation to come to 1.333435 like that, and I wanted to book profit. If they say something like that, that means they are cheating themselves if they are not using the hedging, etc. So, I give the forecast, the market reading on a daily basis during Asian session webinar, and also the trading strategy. But Some people take only the forecast, or some people take only the market reading. Some use only the trading strategy and get confused with themselves. But they are to be used as a bundle. Then you will be able to see that really it works in the market, and you can instantaneously read the market and take quickly the trading decision and try to maximize the profit in each trade without a greed using a trailing stop. This is another important thing. And many of the traders, when the profit is seen in the trade, and they simply be happy and they want to do do the position trade. Okay, let me exit when euro goes to 1.30 or 1.33, but it might come to 1.29. Then you become jittery and close it with a small loss, and later on again euro goes up. So in an unplanned way, if you try to handle the position, then it may miss that, because the players are here to hit your stops and earn money out of that. So we have to understand. So it is something like a place wherein the cannibals are available, and you have to protect yourself. So I will review the forecast once in 4 to 6 months, and depending upon the forecast time available for webinar presentation in FX Street. And this webinar is being recorded and it is being displayed in FX. It will be displayed in FX Street and also under my profile and in fxstreet.net, and you can refer to it from time to time. And if you have got any doubts, you can ask questions to me, and I am willing to answer those questions and also explain to you how the long-term forecast has to be used effectively. And if you look into that of the short-term moves, then the long-term forecast might look impossible. But see, I have been given a set of long-term forecast for the yearly forecast from that of the year 1999, and I have seen, excepting a few times, it has predominantly worked very well. And I was not aware of the multi-year trend reversals in 2008 because it happened in 25 years, so I was not in the market at that time. And later on, I have incorporated in my forecast system. That is why I am able to give the forecast down the line up to 2015 for you. So let me minimize the PowerPoint presentation and answer to the questions which are asked here. And meanwhile, I'll focus the camera to that of the yearly chart for those who wanted to see. I think we should see the chart without any difficulty. Then traded. If that is the case, then you are looking for a strong move in euro and pound versus the yen and franc. Yes, you'll come across that yen and the Swiss franc are expected to weaken, and euro and GBP are expected to gain. I explained in the part 1 how exactly the respective crosses are expected to behave. I'll show the slide also. The basic fundamental technique, etc. for your prediction of strong euro. Okay, now as far as the fundamentals and technicals are concerned, you will not be able to foresee what is going to happen down the line 3 months. We can say that these are all the events are going to be announced, etc. And what is going to happen on a monthly basis, you might be able to project it from that of the past data. But we will not be able to give for 1 year, 2 years, 3 years, and things like that. And for that, we need to have a different system of calculation. So, which I had developed it, and that has been used as an algorithm. I do not want to share it with anybody for a simple reason that it might be misused. Okay, thank you. I will display, no more questions there, so I'll display the slides which are shown during that of the part 1. So what is special about 2012? During January, February and September, October time frame, there could be some events which could put US dollar under severe pressure, and US dollar weakening moves could be seen during that time, and regular market cycles are expected to happen now. So we will not come across the extreme moves in the market. And the last extreme move was Euro Yen, and that is over. And here afterwards, we'll come across regular healthy market moves, and volatile moves are good for market trading. And only extreme moves, sometimes it might give the real trouble for the traders. Otherwise, if you patiently wait either with a short or a long position, you should be able to book profit in the market. Then stock markets are expected to show initially some weakness in the profit booking moves till March, April, and later on we could come across more of a short covering move and also some of the healthy gains in the later part of the year in stock market. Forex market is expected to show thin volume moves, and the volume could improve from that of the second quarter. So till such time, the volatility could be big. Once the volume becomes very strong in the case of euro, you will be able to see the different style of move altogether. And most of the occasions you will find all the false moves will be made only by GBP but not euro. You will be able to see soon that sort of scenarios. And now you find today euro dropped about 100 pips, just like a small swing and recovering. And you may not be able to see such moves in future. Then commodity markets are expected to show more volatile moves, but again the reduced volume conditions might be seen there. This is the forecast what I explained it in part 1. So early January, the first 2 weeks of January, USD gaining moves seen, and mid-Jan to early April, USD losing moves are expected, and mid-April to early July, USD nominal gains could be seen. After that of the first quarter, during the early second quarter, and most of the part of second quarter, you could come across USD nominal gaining moves after quick gains in the case of euro and GBP, and USD CHF and USD Yen are expected to show middle level swings, and during this particular time frame, they are expected to rise as a contrarian move. So most of the time you will come across contrarian move. On certain occasions you will find mixed moves happening in the market. That is why I showed you typically how a contrarian move will be using the live market quote page for your reference. Then mid-July to mid-August, quick USD losing moves could be seen, and the USD Yen and USD CHF are expected to make quick rise during that time. And late August and mid-November, USD big losing time is ahead at that time, and USD Yen and USD CHF are expected to make nominal gains during that time. More priority will be given to that of euro and GBP at that time. Australian dollar could also gain significantly during that time frame. Then towards the end of 2012, USD gaining moves will be seen. These are all the levels estimated. They are all statistically derived estimated levels. So the market may respect or may not respect. Don't blindly go with those levels and later on criticize that euro has not gone up or come down and things like that. They are all statistically estimated. It can go wrong. Always keep it in mind. It can go wrong because they are all man-made calculations and it is not God-given figures. So these are all the ranges. I have shown it and I explained to you what the contrarian move is. Today we have seen that euro drop and GBP rise. This is a contrarian move. Then in the case of Australian dollar, more drop is expected. It could form as a low as 0.77 and 1.05 could be the high, and plus or minus will be there. Don't immediately go with 1.05 and start selling Australian dollar, but watch the moves and understand what sort of moves they are trying to do it. Whenever Australian dollar lag behind when euro and GBP are gaining, at that time you can do sell and buy trade. And as long as Australian dollar is leading the rally on the upside, don't try to sell and wait for a longer time. And now still you continue to see USD CAD and Australian dollar are showing positive net change as a contrarian move. They are handling all the process. So you find a contrarian move wherein Australian dollar rise and USD CAD also rise. That is a condition you come across. On Monday, we have seen that Australian dollar drop, also Canadian dollar drop. So on Monday, they made a downward move in the case of the crosses, and now they are making an upward move. So is it not a pre-planned attack? Then you find that sequence of trend reversals in this manner. So the commodity pairs are expected to lead the rally and lag behind and reverse again as a leader of the rally. So now you find that Australian dollar and Canadian dollar started showing USD weakening move when Euro was around 1.27 and GBP was around 1.53 and Australian dollar was around 1.03 and Canadian dollar was around 1.01. They showed USD weakening move. And now you find afterwards Euro Yen came to extreme low 97 area and started gaining to 99 and GBP Yen came to 117, 118 area and now they have reversed it and then you come across the reversal in the case of Euro GBP, they are gaining now and USD CHF and Yen also gaining now and finally you will find European crosses to make the move. But Euro GBP is expected to drop, Euro CHF and GBP CHF are expected to gain the levels. With the help of the next slide, I'll show it. Anyhow, it will be available in the recorded webinar, so I do not want to take more time in showing all those slides and repeat what I explained. So, I'll also focus it again over that of the chart. Those who want to see. This is how the predicted chart looks like for the year 2012 in the case of Euro. And there might be variation. This is the actual level. So actual is in light blue color and dark blue, slightly dark blue. You come across the predicted chart level. They are all weighted moving averages on a weekly basis. The weak points, every week points, average points are taken and they are all connected using the curvilinear lines. And there are some questions I think questions asked here. Then I explained with regard to the type of currency trading, etc. Now there are some questions. Can you give the prediction for GBP? GBP is also expected to gain, and I given the levels I cannot give because they are all given to the of the paid members. So you have to understand I should not deprive them also. Sorry, it is flickering. Let me minimize because there are too many windows open, so they start. Then, do you expect Australian dollar and commodity currencies to continue to drop? Yeah, you'll find that USD CAD expected to gain levels and Australian dollar to fall when Euro and GBP are gaining aggressively. And there are occasions wherein we have come across in 2008, zero thing that $10 has to catch up along with that of Euro and GBP. Gold and silver in the coming days and weekend. Yeah, gold and silver are expected to gain some more levels next week and also week after that. Afterwards, only the fall is expected to happen. Who exactly are the big players? It's a big question to be answered. Hedge funds? No, not at all. It's not that occasion to talk about. Whatever you have given in real. Okay, thank you. Then let me. So I explained to you with regard to the various types of trend reversals. Oh, the camera is on. Various types of trend reversals, which if you make a note of it and on a daily basis, find out whether it is week beginning or whether it's the second day or it is the midweek or it is Thursday and Friday. If you watch these and try to trade accordingly without even asking me, you will find that you have identified the market moves. And similarly, the first week of the month and the last week of the month, trend reversal, avoid taking positions. And especially they are expected to make more volatile moves during that time. Small traders cannot withstand such volatile moves. And suddenly they may make a drop of 150 pips one day and second day 150 pips rise. And if you try to take a buy and cut your position and take sell, and you will be booking loss there. So avoid entering to the market during that particular sort of high volatile times during the monthly trend reversal time. Similarly, the yearly trend reversal time, which happens once in a year, and sometimes traders get margin calls during that time. So always keep in mind less position, and each position try to maximize the profit. Using a trailing stop, nobody can beat you, nobody can prevent you making money from the other market. So I will review this webinar once in 4 months depending upon the slot availability, and try to show you the actuals along with that of the predicted chart in the case of euro, and also give you an understanding how we can easily predict the market. And on a daily basis, if you want to interact, and you can just post your questions in my blog, inoindices.com/blog, for the intraday discussions and more of intraday calls. So I take this opportunity to thank FX Trade for the nice opportunity given for me to present the forecast for continuously from 2005. It's a great honor and for me, and you people who have come here patiently and listen to my talk, and hope you are benefited out of this. And if if I removed certain amount of fear from your mind, I am extremely happy about it. If you've got further questions, you can always send me as an email, dr@inoindices.com, or you can go to inoindices.com and just click chat and send a message also for me. Or you can contact me through MSN Messenger, Yahoo Messenger, inoindices without hyphen at yahoo.com or hotmail.com. I'm available from 2 to 18 GMT online, and you can contact me, ask for trade solutions, any positions which is showing unfavorable condition, how exactly you can come out. I can really help you out, because I wanted to help the small traders as a mission, so that they also get rid of the market fear and try to earn. That is the basic purpose for which they enter into the market. In the process, they become distressed traders or addict to trading and lose all the family life and values and things like that. And I want to extend certain amount of help to such people who can really shape their life out, because it's very difficult to get a smooth life, and don't spoil it just because of the market. Thank you one and all. See you on Monday during yet another session of Asian Session Live Market Analysis.